Welcome back. Well, let's get in. Manisha Gupta is joining us with a roundup of all the action in the commodity and currency markets. Hey, Manisha, over to you.
Thank you so much for that, Sonal. And I have a very special guest. Ole Hansen is Head of Commodity Strategy at Saxobank and Saxobank, I beg your pardon, and he joins us on the show here. Ole, hi, good to have you. And the big event is done. Of course, the markets are waiting for the Bank of England monetary policy meeting today. But I want to start with the base metal as a complex where we have seen decline. And among this as well, zinc clearly seems to be underperforming. Yet another 3 to 4% of a decline in the overnight markets here. We're down by nearly 15% when you look at last 1 month.
It is indeed, and I think primarily that is still, I would say, a China story that we're still really waiting for some solid news that we turned the corner in regard to China. Specifically, what's happening inside the market is a bit more difficult to. I think that it's a bit clouded right now, but I view China as the main reason, but potentially also. We've seen some comments from some of the major miners recently, and they have primarily, I would say, been supportive for something like copper, where the producers are still facing some issues, and we are looking at a potential deficit over the coming years.
All right. How are you looking at the energy as a sector, though? Because even with the hawkish view that we have seen come in from the US Fed, the crude oil prices actually are quite supportive. Also, the fact that the OPEC will cut output, you have winter demand coming forward. Are you bending more towards $100 a barrel then?
In the oil market, there's just simply so many moving parts, both on the supply and the demand side, which makes this market incredibly difficult to forecast. And we can see that the result of that being a relatively range-bound market. But I think looking ahead, we're now into the months where OPEC is cutting production. They're saying that due to excess capacity or excess surplus in the market. I'm struggling to see where that surplus is, because we have seen these very elevated prices for both diesel and gasoline during the past month. Adding to that, obviously, the well-known sanctions against Russia, the impact of Russia's ability to export, I think will still leave the market tight, and that tightness probably will offset the potential decrease we're seeing in demand from the global economic slowdown. So I think the risk of $100 is at this point higher than the risk of a move back below 90 at this point.
All right. Ole, another area to watch really is the dollar index. And we've seen a range coming in here. Would you say a near-term top in dollar index perhaps has been made for now?
I think we are very close to it. Looking at how the investors have been behaving, especially in the futures market, which I track very closely, we're actually now seeing net buying of euro dollars for the past 8 weeks. Dollar yen is still the big open question. They really need to see the Fed rolling over before we can see some buyers come back to the yen. But we are seeing the first signs that we are getting close to a rollover. But we need the Fed to play ball for that to really to play out. They need to signal that they are starting to slow the pace, and perhaps even starting to consider a pause just to see the economic impact. And once we see that, I think we reached the high point for the dollar, and that would basically also lead into our general belief that we'll see another strong year for commodities in 2023, even though we have an economic slowdown.
And I also want to talk to you about the agriculture as a space. And while we're looking at weather onto that, the Russia and Ukraine conflict, it also has to do about the interest rate hike. I mean, there are just so many things to look at when you look at agriculture, including what various governments are doing to ensure that there is enough availability and affordability. But with Russia doing this back and forth, how are you reading that? What is the global impact on agriculture commodity prices and availability?
Well, wheat has responded relatively muted. We saw an initial spike yesterday. We have to just looking at the futures market. Last week, just before this announcement, speculators has increased their net short by more than 60%. So there was a lot of short covering hitting the market in early trades yesterday morning, which drove the prices higher. But I think the general belief is that Russia is not going to shoot down grain ships. But no, that's one thing. But at the same time, can these grain ships get the insurance that's required for them to continue to transport wheat away from the Ukraine? That is really the tricky part. What I'm more concerned about right now is this extreme drought that we have in the US, where the wheat conditions for the winter crop is the lowest ever at a 28%. That obviously doesn't bode well for supplies when we move into next spring. So generally, I'm reluctant to call prices higher, but unfortunately, I think that is the risk for some of these key food prices over the coming months.
All right, that point is taken. Thank you so much, Ole, for joining us. So crude oil prices more towards $100 a barrel, and key food global inflation is something that's a bit of a concern as well.
All right, it is a concern, and we've seen that in the numbers of the Devyani as well. The management is talking about affordability being an issue, as a result of which Jubilant Foodworks has moved to the low point of trade as well. In fact, the market too has sold off, is just above that 18,000 mark as we speak. We wrap up on this edition of Halftime Report. You stay tuned. Business Lunch comes up next.